Welcome back everyone to the Uranium 2021 series, part 2. I figured before we get into a few things about next year and about a few other assorted topics that I was going to look at, I figured we should have a recap of this year. What went well, what went slower, what a few of those things mean, and where we are kind of today in relation to what not happening affects what point in the future. And I hope you'll see what I mean. So let's get to it. So 2020 proved to be quite the year. And I'm not just saying that. In uranium, it was an eventful year as well, because we did see a number of disruptions that probably worked to accelerate the inventory drawdown. We also saw the price move from the mid-20s to the mid-30s and then back down to 30. And despite all that move, despite everything that happened, we didn't see anything, we didn't see a price move or an event that moved towards fixing the problem. And when I say that, I mean making the bull case more of a balanced market neutral case. Nothing really fixed that. So as I said, there were numerous disruptions, both on the supply side and probably some energy demand side in isolated spots, particularly France, a bit on the margin there. But some of the big supply side for uranium disruptions came in Kazakhstan and Cigar Lake, both of which it looks like we have yet to see the final tally for how much supply those disruptions will have removed from the market, because Cigar Lake shut down again, and Kazakhstan, well, because of the ISR process, there's long tails to that disruption, and up to 9 months after they restarted, we'll still be seeing effects of the disruption, so into next year, as well as some disruptions in Namibia and in various other places around the world for anticipated and unanticipated reasons. So I said that nothing fixed the problem, and to explain that, I think let's go a little bit more into the bull case, because the bulls, there are people that would say the bulls were wrong. I think it's more nuanced. Obviously the price didn't move, but if you ask the bulls what was going to happen, they'd tell you. If the price didn't increase, you won't see mine restarts. We didn't see any mine restarts. And the bulls also said Kazatomprom or the Kazakhs aren't going to flood the market. They didn't. In fact, not only did they not flood the market, but they extended their reduction, which again was basically on the table and basically shown with the actions that they were taking beforehand, yet some people still thought that they would. More evidence to the contrary, I guess. Bulls also were saying that inventories will continue to draw down. Now, the thing about uranium and the thing about tracking that inventory is it is very delayed to see the progress there, but I believe that once the data comes out, we will see inventories continue to decline. So on the demand side and future demand side, it was a bit of a mixed year, but there was overall, I would say, progress. I think even though it is very difficult to track the progress exactly here, but I think we had a bit of a slow year out of Newbuilds in China. Now that's understandable based on, what's going on in the world. But the 6 to 8 target per year, it doesn't look like it was met at least kept up to the same pace as last year for this year. So out of Japan, I think we had a pretty good year in terms of restarting Japanese reactors and steps taken towards restarting Japanese reactors. However, still, in my opinion, that's not the most needle-moving thing near term because of the storage situation that I've spoken about in the past. They still have the fuel, but it was definitely a help in the short term. More positive sentiment around the world really towards nuclear. I think that we have seen that. And we continue to see a lot of talk about SMRs, small modular reactors, the future, safe, going to build this many, going to build that many. And a whole bunch of companies are talking like they are going to. So hopefully that eventually becomes the case. And there was a surprising amount of progress in the UK and some European countries that seem to have positive momentum towards nuclear. So, you know, it's becoming part of the discussion, and the whole carbon neutral, green energy whole direction that a lot of people and a lot of investors are believing is important for the future. There's a lot of logic and acceptance towards nuclear becoming a part of that, which, if you look at the science, it looks like it probably should be. So in 2018 or 2019, depending on how aggressive you want to get, it was decided that there would be inventory drawdowns in 2020. No one individually decided that, but because the price did not go up in those years, there's inventory drawdown this year. Because the price did not go up this year, there's inventory drawdowns next year. This is one of the dynamics of why some of the bulls will suggest that the price should have already moved to fix the balance in the market, but it has not, and so the inventory drawdowns will continue until after the price moves and after the problem can start working itself out. That said, in 2020, we got bonus. Why? Because in addition to the inventory drawdowns based on last year's price and the year before's price, we also had shutdowns in mines, planned and not planned, and surprise also. There's a bit of a difference. I'm talking about Cigar Lake, Kazakhstan, and then the surprise was in the Ukraine recently. No one was really looking for that, but it happened. And so this accelerated the cleanup of the spot market because the contracted pounds that weren't produced from a mine were bought in the spot market. So it accelerated the point where we will get to at some point where there won't be enough material to buy at these prices in the spot market, whether it will be there at higher prices or whether it will need to be produced in a few years. Not entirely determined yet, but it's a direction that we're heading. All this means is that evidently, up to this point, the utilities are not concerned as a group about their contract coverage situation because, you know, there's word out there that some request for proposals where basically a utility will ask, what's it going to take to get my uranium? Some of them were rejected because I guess the producer said it's going to take this much and the utilities said no, price is too high. Now, maybe this is because they think they could get lower in the spot market, maybe whatever. But what that says to me, what that makes me think, is that the market is running low on offers for people selling or companies selling the low cost or low priced material. Meaning we seem to be approaching a point where there's going to have to be new entrants or higher priced material that becomes accepted. But as it stands right now, looking forward, the contract coverage for the utilities as a group is not great. Of course, this rolls, and every year there's some contract coverage for each new year, but every year there's more that runs off. So at this point, utilities are not largely covered. Similar to different points in the past, this would not be a problem, may not be a problem, if there's enough easily accessible spot market uranium out there, as was the case for much of the past decade, really. But if there isn't, then it's better for them and more secure for them to contract out supply to get it from a primary source. So one thing that is, I find, under-discussed is SWU price. And I made reference to it briefly, I think maybe twice in 2 videos this year or something. But the SWU price has been inching up in the right direction for much of this year. Now, there was a pause in the later summer months, but the SWU price is basically a downstream version of what utilities would buy for their uranium needs. So in terms of simple way to understand this in terms of a different sector, it would be, okay, companies buy steel, steelmaker buy iron ore to turn into steel. So uranium is the iron ore in this process. SWU is more like the steel. Not exactly, and there's more steps, but it goes to show that through this analogy that the downstream, the SWU and the steel are likely to recover before the upstream, which is the uranium and the iron ore in this case. However, or not however, but historically this has been it shows that there's strength in the demand for the cycle recovering. And so that's why, despite it being very little talked about, and frankly the math is above most people's willingness to try and understand, me too, it's complicated, but I have a basic grasp on it. But it's continually moving higher, which is positive for the demand cycle, really. Now, all this talk about upstream, downstream, and prior to that, the talk about long timelines, kind of reminded me of something that hasn't been mentioned, at least by me, in a while, and I haven't really seen mentioned in a while. And that is the reminder that it takes 1.5 to 2 years, really, probably more towards 2 now because of the bottleneck and conversion, but it takes let's call it 2 years for fuel to be made into fuel, frankly, for material U3O8 to come out of mine, be converted, enriched, fabricated. Takes 2 years. And this is quicker if you're buying more downstream, if you're buying at the SWU stage, if you're buying conversion, if you're buying fabricated fuel, but I mean that's made to specification, so not really. Anyway, the point being that if you wanted to have some fuel made from out of uranium that was not yet going to be produced from an existing mine, you'd be talking 2025. If you needed a new mine to be built to get the uranium, to get to fuel, to get into your reactor, you're not getting that before 2024, probably 2025, maybe 2026. And that's today. So the timeline for fuel and the timeline for contracting needs to be really long. And this means that you can't expect, if you think a shortage is going to pop up in the future, you can't necessarily wait for that shortage. Now, I mean, we could argue that the shortage is there today, but if you think it's going to be a shortage in the future, you need to start working to fix that well in advance. And the other interesting thing about 2025 is that if you look at current projections, that is after Kazakhstan has slated to have peaked their production, which is in 2023, and in the mid to late 2020s into 2030, it is when secondary supply is due to decline by, let's call it 5 million pounds a year, even though it's probably more, but could be less depending on what time frame you're looking at. So we're now talking about ready mines turning into fuel half a decade away. Think about that, and then think about the 15 years that it takes to turn something into a mine. Anyway, that is it for today and for part 2. I think there's going to be a part 3. Until next time, hope you enjoyed. Have a great day.